Hi there, you're watching Market Cafe on ET Now with me, Shriyanti Singh and Priyanka Uppal, and this is the show where we get you up to speed when it comes to morning news and updates from within the country as well as across the globe. Also tell you which stocks you should be keeping on your radar and tell you what the brokerages are saying as well. But well, first things first, let's take a look at the handover then coming in from the Wall Street. And a very bad one at that, Priyanka, because not a good handover at all.
Morning, Shriyanti. Shriyanti, we've seen the kind of surge in US markets. Of course, this comes as a surprise, and this especially the concerns over the deep sea that has come to a head on Monday again. Now, if you look at NASDAQ, in fact, futures were also indicating you that it's going to be a very heavy day for NASDAQ. 15% they were down before the opening, but then NASDAQ, that one lost more than 3% yesterday. S&P 500 slid about 1.5% yesterday. Now, investors are, of course, turning their attention towards the corporate earnings. It's a corporate earning heavy week on US markets. All the FANG stocks have to report numbers, as well as there's a lot of economic data, especially the data from FOMC meet has to come in. And of course, let's not forget Fed's favorite, the index, PCE, that's the benchmark, that's inflation gauge for them. That is also to come on Friday. So a very heavy week, but then DeepSeek, that is actually, creating tremors for US market. We've seen the kind of moves on in stocks like Nvidia reported, and let's not forget this earnings on the deck today is going to be Starbucks, Boeing, a lot of key earnings, and of course they will only be able to decide on the direction for the what kind of cues we get from Meta, Tesla, Microsoft, Apple, which are due later this week. And of course, the big tap is on the FOMC meet, wherein 90% of the chances are that interest rate will remain unchanged. So let's see, big cues to come in from US markets this week.
Well, absolutely. Big cues is something that we're looking at. But let's also, speaking of big cues, take a look at oil markets, then see what they're up to, because oil prices fell about 2%, pressured by losses in the Wall Street. But you also have a whole host of factors. So a confluence of factors really is what you're looking at when it comes to oil prices. Oil was already down earlier in the session on weak economic data from China and worries that the US president is going to be proposing tariffs that could further pressure economic growth as well as energy demand. So that is something that we've been quite worried about as far as the oil markets then are concerned. And when you take a look at the handover then coming in, Brent crude futures are the ones that fell 1.8%, closed around that $77 a barrel mark. So sub that $78 per barrel level, that is very important. US WTI as well, 2% downtick coming in, $73 per barrel is the kind of level that you're looking at as far as WTI also is concerned. When you take a look at OPEC and its allies, including Russia in the OPEC Plus group, they're yet to react to Trump's call at this point, with OPEC Plus delegates still pointing to an existing plan to start raising oil output from April. Now, this has been something that has been in the works. So let's really see how this sort of commentary is sort of factored in when it comes to oil prices. But let's also then shift focus to cryptocurrencies, because they were the ones that were tumbling to begin the final week of January, with the market in fact in a cooling period at this point, and there's been quite the run up to a new record pulled lower by the DeepSeek driven sell-off that we've seen in tech stocks as well at this point. So when you take a look at the price of Bitcoin, fell 3%. And that is the kind of move that you're looking at as far as Bitcoin is concerned. The important thing to mark here is that it is below that $100,000 mark. That is the important mark that it had crossed recently in the rally that we've in fact seen coming in. And even when you take a look at CoinDesk, Priyanka, 5% losses coming in there as well.
All right, absolutely. But then let's get you the key global cues to watch out for from US. Of course, the economic data, the FOMC meet, 2 days FOMC meet begins today, and then along with that, the consumer confidence data is on the tab for the US. From as far as the global earnings is concerned, earnings from Boeing, LVMH, and SAP, that is to be watched out for. But back home, on front of Nifty, we do have crucial earnings coming from Bajaj Auto as well as Cipla. As far as corporate action is concerned, Wipro, Zensar, they will be in focus today as they would trade ex-dividend, and last day to buy shares if you want to be eligible for dividend in terms of BPC at holders. So these would be the key events to watch out for.
Well, absolutely. Lots of events to keep an eye on. But tell you what, let's get tracking and let's get talking the top headlines this hour. Then the talk of the town, DeepSeek, has come out and said that it will temporarily then be limiting user registrations on account of large-scale malicious attacks on its services. In fact, remember that the Chinese AI startup has generated a lot of buzz as a rival to OpenAI's ChatGPT and Google's Gemini. Then, important to note here that DeepSeek has in fact surpassed OpenAI's coveted spot of the most downloaded free app in the US. And of course, that has led to investors also running for cover towards the safe haven asset classes. After those deep jacked edges on the Nasdaq as well, 3% is the kind of cut that you're looking at as far as Nasdaq then is concerned. In fact, the company then resolved issues relating to its application programming interface and users' inability then to log into the website according to its status page. The outages, in fact, on Monday were the company's longest in around 90 days and coincides with its skyrocketing popularity. So that is the latest as far as this particular app then is concerned. In fact, we also caught up with the co-founder of AI and Beyond, Jaspreet Bindra, to get his perspective on the AI route led by DeepSeek. Let's go across and listen in to what he then had to say.
Hint that something was brewing in startups, companies, labs in China, which could hit us soon. But I think in the beginning of the year, there have been two big things which have hit this planet. Donald Trump and his executive orders, which upended the global world order. And now this DeepSeek, which is kind of probably going to upend the global AI order. There are 3 or 4 things very quickly which are different. First of all, it is much, much, much cheaper. It has been made at less than 3% of the costs that, say, an OpenAI would have incurred to build a similar model. Number 2, it's open source and it's completely been published and given out free so that everyone can work on it. Number 3, it uses chips which are not the latest chips. They're the last generation chips. The latest chips, as we all know, the US was denying China. And number 4, these are not the much wanted supermen of AI who have built this, but actually very brilliant young students from top Chinese universities. And so the whole talent narrative has also changed.
That was an expert take on DeepSeek, but what exactly is DeepSeek and how is it disrupting the AI landscape? Anjali Palod breaks it down.
The latest AI model from China's rising startup DeepSeek is spelling trouble for companies like Nvidia, OpenAI and Google. So what's the story behind DeepSeek? Founded in 2023, DeepSeek is an open source AI development startup. It is funded by Highflyer, which is a Chinese hedge fund. The founder, Liang Wenfeng, is known to deploy AI algorithms to make investments in the past. Using his expertise from these experiments, he started researching on developing LLMs and reasoning models for AI. The latest launches from this startup include DeepSeek R1, DeepSeek V3, and these are the ones that are turning heads. Launched on January 20, DeepSeek R1 is a reasoning model. So while traditional AI models like ChatGPT o4 that you may have used, they focus on text generation. This excels at complex reasoning, problem solving, and strategic decision making. And these are the things that typical language models struggle with. But what is so special about DeepSeek? The real magic of DeepSeek lies in its ability to achieve big results with a fraction of the budget of its competitors. So, while there are other Silicon Valley companies that are making these models, DeepSeek makes it at razor-thin budgets as well as timings. Take its R1 model, for example, which was used innovative techniques to save on costs. And this has translated into lesser charges for its users as well. So for 1 million input tokens, OpenAI charges $15 and DeepSeek charges just 55 cents. Now, DeepSeek's triumphs have caught the attention of US giants too, who are now expected to take China's AI capabilities more seriously. Satya Nadella too took note and called DeepSeek super impressive. After this, the stocks of chipmaker Nvidia have nosedived. The world is now questioning whether billion-dollar budgets that come from OpenAI, Google, as well as Meta, and these are in billions of rupees, whether they still make sense in AI development. Or is it time that we rethink how we build and price our AI systems?
Well, absolutely. Thanks, Anjali, for that update coming in. So, spell trouble, it indeed, that is something that has happened because $6 million is the kind of money that they've used to build this particular model. But let's move on, get you some more updates on this then, because you do have US President Donald Trump, who's also reacted to the DeepSeek route that Chinese startup DeepSeek's technology should spur American companies and said that it was good that companies in China have come up with a cheaper, faster method of artificial intelligence. In fact, he called it a wake-up call for the US. He also said that the industry in the US then needs to be laser focused on competing to win. So that's the latest commentary as far as Trump is concerned.
All right, no, let's just keep it pace with this news only. AI darling Nvidia lost close to a whopping $600 billion in market cap. That's the biggest single-day drop for any company in US history. Chip makers' share prices plummeted 17%. It was company's worst day on the market since March 2020. However, after Nvidia's huge run-up, the stock soared 239% in 2023, 171% in 2024. The market is on the edge about any possible pullback in spending. Broadcom, the other big US chip maker to see giant valuation gains from AI, fell 17%, pulling its market cap down by $200 billion.
Alright, then moving on, shifting focus away, the US Senate has voted to confirm billionaire Scott Bessent and Trump's new Treasury Secretary. Then the Senate voted 68-29 to confirm the Wall Street veteran, with 16 Democrats joining all Republicans to choose Bessent for the post. He will be the 79th Treasury Secretary, and remember that he's the founder of Key Square Group, will be playing a key role helping Trump enact his economic agenda, including having insight on tax policy.
In the meantime, the World Bank President Ajay Banga reacts to the tariff-led fears in the market, says policymakers around the globe should not react in haste to announcements by US President Donald Trump's administration and should be prepared to argue their case. Speaking from earlier experiences of working with Trump, Banga believes Trump understands numbers and leverage and advantage also.
Alright, then that was your daily morning news and updates dose. But time now for a very quick breather on the show. When we come back, we'll take a look at how the Asian markets are faring, so don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at the Asian markets, and we do have a mixed bag at this point as far as Asia then is concerned. Let's take a look at Japan's Nikkei first, because that is the one on your screens holding on to a tinge of red, 0.8% downtick coming in for that one. You do have shares of Japan's chip-related companies that dropped as Chinese AI startup DeepSeek, that we've talked about thus far in the show as well, free open source large language model. That is something that is threatening US AI dominance at this point. On the back of that, Japan's chip stocks as well as Japan's Nikkei is the one that had a tinge of red coming in. Shares of Hong Kong listed Alibaba climbed 3.3% and Tencent also added 1.6%. You do have Hang Seng on your screens, 0.4% uptick coming in for that one. When you take a look at Shanghai though, on the flip side, that is down just a tad bit, 0.1% decline coming in for that one. China's factory activity, in fact, in terms of the growth in January, unexpectedly contracted. So that is something that you're looking at as far as macro data then is concerned. But you do have the Australian, Taiwan and South Korean markets that were shuttered for holidays as well. And in terms of the handover then, quite the mixed bag like I've mentioned earlier. So in terms of where we closed yesterday, 22,820 is the level that you were looking at. 29 in fact was the level that you were looking at, and above that 22,820 mark is what the close really was. And in terms of what the handover then is, you do have a very bad handover coming in from Wall Street, a mixed bag coming in from Asia, and at this point we're still penciling in a good start for us, but let's really see if that changes through the course of the day.
Okay, so we look like we could be a gap up by 76 points, but let's understand what do we have in terms of an action power pack lineup for you. At 9:20, we get a pulse of what mutual funds are exactly doing at this point. And Rajesh Bhatia, from CIO from ITI Mutual Fund, will join us after a deep correction of 13-14% on index. What is that the mutual funds are thinking of? To deploy more cash or wait for some more time? At 9:30, we speak to Satyanarayan Raju, who's the MD and CEO from Canara Bank, earning, let's understand, the NIMS and NII, both on sequential as well as on YoY basis, came in declining. Let's see the roadmap ahead, what he has to guide us. At 9:40, we would decode DeepSeek's threat to big tech when we try speaking to Ray Wong. He's from the Constellation Research. At 9:50, we keep a pace with earnings only. We would have Venkatraman Venkateshwaran, Group President and CFO from Federal Bank, joining us.
Alright, and with that, time now to take a look at some commentary coming in when it comes to the budget, because as we head closer to budget, let's take a look at what Sumit Singhania, who's the partner at Deloitte India, then is expecting this time around.
Looking at budget 2025, the government focus will be on largely three themes. First up, maintaining the economic growth percentages for FY25. If you look at from Q1 to Q2, the GDP growth has declined significantly from 6.7% quarterly growth to 5.4%. Most of the proposals in the budget would be basically aligned to prop up that economic growth trajectory. The second important theme of the budget would be on employment generation and the skill development. And the third will be to ensure that the infrastructure capital outlay momentum is maintained. From 2019 to 24, the percentage of the infrastructure spend has already gone up from 1.9 to 3.4%. There's largely an expectation that this budget will continue to maintain the 3.5% mark for the infrastructure spending. It would also be fair then to expect that most of the tax proposals in the budget would be aligned to these three broad themes. More specifically speaking, three distinct expectations I would have from this budget. First one, the government should ideally look at bringing back the 15% tax rate for manufacturing business and even extending that to some sunrise sectors, including the infrastructure and power generation sector. The second one, government should look at ways to incentivize the long-term financing for the large infrastructure project. There was a provision until April 2024, a lower tax rate of 5% was provided for the long-term infrastructure financing. That has been unfortunately phased out in last 12 months. There is a case, very strong case made out for bringing back that tax law. And if I look at the fiscal deficit number for the current year, there is just the right amount of the wiggle room government has to sort of reintroduce that tax concession. And finally, one expectation would be to relook at some of the merger and acquisition tax provisions of the law and see if some simplification and the rationalization can be done to ensure that the M&A can be implemented in a far seamless manner in India.
All right, so Sumit Singhania from Deloitte helps us understand what could we should expect from budget in terms of the taxation. With that. Welcome back here. Tune into Market Cafe. Let's get you some key earnings which were reported after the market hours yesterday. Tata Steel was one of them. Reported a beat on all fronts despite a sharp fall in quarterly numbers. The steel maker posted over 60% drop in quarterly profit on a sequential basis. Q3 PAT fell to 296 crore from 759 crore in the last quarter. Revenue fell slightly to 53,648 crore. Meanwhile, margin also came in lower at 11% versus 11.4% in the last quarter. In fact, we do have a reaction coming in. We decoded the number with Aditya, who's a senior research analyst who covers metals and auto for Axis Securities. This is what he has to say on this.
The first preliminary impression is that the results are good. Tata Steel India EBITDA has also beaten our expectation. On a sequential basis, there is a 13% increase in Tata Steel India's EBITDA at 7,600 crores. Losses at EBITDA at Europe has narrowed. So EBITDA per ton, if we do some preliminary calculation, at EBITDA per ton at Europe has narrowed to $41 per ton as against $75 per ton in the previous quarter. And EBITDA per ton at Indian operations stood at 14,400 rupees per ton, which is a 10% increase on a sequential basis. On a year-on-year basis, we all know that there is a drop in EBITDA because of the fall in the steel prices. So it's a slightly surprising that Indian and European operations have done well as compared to consensus. Net debt figures are not yet known. So the presentation from the company is not out yet. So we will come to know about that. The beating on the EBITDA is largely reflected in other trade-related operations, which is forex movements.
All right, and that's the verdict coming in, and that's the word coming in from Aditya Velekar as well as far as Tata Steel then is concerned. But let's move on then away from earnings, because the RBI has stepped into action, unveiling bold liquidity management measures to safeguard financial stability. In fact, it's also rolling out OMO purchase auctions worth 60,000 crore rupees in 3 tranches and a 56-day variable repo rate auction for 50,000 crore rupees, a calculated move then to keep markets steady and also ensure cash flow where it's needed. We do have Ankur Mishra who has the full breakdown of what this really means for the economy. Ankur, take it away.
Yes, 3 major announcements coming in from central bank. It includes OMOs of rupees 60,000 crore. There is also an announcement of a dollar rupee swap, and it includes 56-day VRR repo auction for banks and financial institutions. Let's understand one by one what does that mean. The first and foremost announcement is of open market purchase of bonds, and that will include 20,000 crore each in 3 tranches, which will start from January 13, then February 13, and followed by February 20, 2025. Apart from that, 56-day VRR will also be conducted. Now remember, there was a daily VRR announcement which was earlier done by the Reserve Bank, and now 56 days VRR auction will be conducted by central bank in a way that will allow banks to borrow funds from Reserve Bank of India and return after 56 days whatever the a set interest rate which comes in the auction. The third and foremost important announcement has been made on dollar rupee swap, which has been one of the suggestions which had been made by the representation which was there to Reserve Bank of India. Now in that, Reserve Bank of India will be buying the dollars from banks, and later on after 6 months that return can happen. So in a way, the idea is to stabilize the liquidity condition which has been deficit to the tune of rupees 3 lakh crore. So all in all, Reserve Bank of India has come into action. Now we need to wait and see what more options are being deliberated by Reserve Bank before monetary policy.
All right, that will be a key monitorable to watch out for. Thanks very much, Ankur, for decoding the latest action by RBI. But then RBI, of Reserve Bank of India, supersedes the board of AVM India Housing Finance after taking note of some governance-related issues. My colleague Anjali Palod is here with some key details on that. Anjali, over to you.
The Reserve Bank of India has superseded the board of AVM India Housing Finance, citing governance issues as well as delays in payment and even defaults in some cases. Now, they've appointed Ram Kumar, who is an ex-PNB official, as the administrator of AVM India Housing Finance on the recommendation of the National Housing Bank. Now, a case of fraud within the company was revealed after a whistleblower complaint, and this led to a probe. A forensic audit of the company found that 1/6 of its 1,750 crore loan book is likely to be suspicious, with fake book entries of loans and investments. Now, last year in November, Economic Offences Wing had also filed a criminal complaint against the directors of the company. Now, while the CXOs are shifting the blame on each other, creditor payments were delayed, and that led to this RBI action. Now, going forward, RBI will initiate the process of resolution of the company and apply to the NCLT for the solvency proceedings to protect the interest of the stakeholders. Now, the major stakeholders in this company include HDFC Bank, which has a 47 crore exposure, LIC Housing Finance with 40 crores, HSBC with 25 crores, and SBI with 16 crores.
Well, absolutely. Thanks, Anjali, for that update coming in. Let's keep it going, in fact, then with the RBI, because you do have the RBI governor who's conducted his first meet with MD and CEOs of public and select private sector banks in Mumbai as well. What were the key topics of discussion in the meet then? We do have Ankur Mishra joining us yet again with that update. Ankur, tell us a little more about what was on the agenda when it comes to this meet.
Yes, Reserve Bank of India Governor Sanjay Malhotra held one of the first meetings with banks in Mumbai, and he has highlighted few of the risks which are there for financial institutions. He mentioned that the rise in digital frauds, and banks needs to establish a robust fraud prevention systems in order to give some convenience to customers. Apart from that, there should be IT risk management by the banks properly. He also held that cyber security oversight on third-party service providers need also be something which needs to be paid attention by the financial institutions. Apart from that, he also said that RBI as well as banks should work together to enhance ease of doing business. Apart from that, he also urged on the financial stability, deepen financial inclusion and improve digital literacy. One of the few things he paid attention was also on enhancing credit availability and affordability for economic growth. Now, all in all, this is first time which Reserve Bank of India Governor Sanjay Malhotra held meetings with the banks, and meeting has happened before Monetary Policy Committee meeting, which is set to be scheduled from February 5, 2025.
All right, thanks very much, Ankur, for that detailed view on that and the breakup of what exactly happened. Thanks very much. Moving on, private equity exits from India have surged to levels not seen since the peak of the pandemic in 2021. Some key PE exits in 2024 included sale of Advent International holding in Bharat Sitharaman Vaccines to Mankind Pharma and sale of some stakes by PEs and venture capital funds in the Swiggy IPO also. Key trends that have emerged for PE exits since the COVID-19 era are the growing role of IPOs to facilitate stake sales of PE firms. Anurag Joshi is here with all the details on that.
The value of private equity exits in India has touched the highest levels since the COVID-19 pandemic phase. The total value of private equity exits in 2024 was $24 billion, and this compared to $37 billion in 2021. Now, there has been a pickup in private equity exits as the funds are getting an exit opportunity due to vibrant IPO markets, and also because the equity indices touched all-time highs last year. The key driver has been IPOs, which has given exits to many of the private equity funds. In fact, in 2024, total exits through the IPO route and the public markets total more than $15 billion, while this compared to $12 billion in 2021. And at the same time, we saw secondary sales, which includes bulk and block deals, come down to $2.4 billion compared to $11 billion in 2021 and $4.1 billion in 2023. The biggest PE exit in 2024 included Bharat Serum, in which PE firm Advent International sold its stake to Mankind Pharma, whereas in 2023 the biggest transaction was Flipkart, where Tiger Global and Axel India were among investors that sold their stake to Walmart. In terms of the returns to the private equity funds have got better returns in 2024, and if we see the PE exits at price earning multiples of over 10 times. The number was 27 such exits in 2024, and this compared to 2020 compares to 24 in 2023, and in 2021 this was 31. So clearly there has been a good pickup in private equity exits in 2024.
All right, thanks Anurag for getting us that lowdown on PE exits then. But time for a very quick breather on the show. When we come back, we'll get you a list of stocks that you should then be watching out for. So see you on the other side of that very short break.
Welcome back. You're watching Market Cafe. Now, time to get you all the stocks that could be buzzing in trade today. Ria is standing by with that list. Ria, morning.
Yes, good morning. Let's take a look at the stocks that are going to be in focus today. First up, Piramal Enterprises will be in focus on the back of its Q3 numbers. Now, the revenue has declined marginally, just about 1%, and the EBITDA has seen a decline of almost 11% on a year-on-year basis. Even the margins have fallen by around 480 basis points, but the interest income has gone up around 13.3% on a year-on-year basis. And this time around, the company has reported a net profit of 28.5 crores versus a loss of rupees 2,377 crores in Q3 of last year. Bajaj Housing Finance has also reported reported its quarter 3 numbers. Interest income has gone up around 25.8% on a year-on-year basis, and the net profit has gone up over 25% over the previous year, coming in at 548 crores in this quarter. IGL has also reported its quarter 3 numbers. The revenue has gone up around 5.5% over the previous year, but the EBITDA has declined around 35.6% on a year-on-year basis, and the margins have also fallen by around 559 basis points. Even the net profit has seen a decline of over 31.5% in this quarter. RailTel will also be in focus on the back of its Q3 FY25 numbers. Revenue has gone up around 15% on a year-on-year basis. The net profit has gone up just about 4.7%, but the EBITDA has seen a decline of 6.5% over the previous year, and the margins have gone down around 359 basis points, coming in at 15.8% in this quarter. Shifting away from earnings, though, also keep your eye out on ITC Limited, since ITC Hotels Limited has received approval from the NSE and BSE for listing and trading of its equity shares effective from the 29th of January 2025, and they've apportioned the total cost of acquisition, which will be 86.49% for ITC and 13.51% for ITC Hotels. So keep your eye out on all of these stocks today.
Well, absolutely, Ria. Thanks for getting us that update. So that's the list of stocks to watch out for. But shifting focus right back to earnings, because Bajaj Auto is the one that is all set to report its Q3 earnings. When you take a look at the kind of expectations, margins are expected to remain stable. We do have Srishti standing by with a roundup of what else the street then is penciling in. Srishti, over to you.
Well, this time from Bajaj Auto, we are not expecting much. Why so? Because on the volume front, they were not that supportive, because the domestic volumes in the two-wheeler segment have actually declined 1% on a YY basis, while the three-wheeler volumes were supportive, and so was the export volumes, which have seen an uptick of 22% on a YY basis. But the overall mix wasn't that great, and that has actually impacted the numbers, though on the average selling price, we have seen a jump of 6% on a YY basis, which could actually support the numbers a bit. If we talk about the top line, 12,986 crores is what we are expecting. EBITDA expected to be almost flat sequentially. 2,595 crores is what we are expecting on that number. But the key to watch will be the margin figure, because do remember the higher EV sales has been putting a bit pressure on the margin number. Other than that, the export has been doing fairly better. On the flip side, that will actually support the margin figure. So 20% is what we are expecting. Any positive surprise on that front will be taken nicely. If we talk about the bottom line, 2,172 crores is what we are expecting. But apart from the numbers, all eyes will be on the management commentary, how they see the industry outlook going forward, what kind of a growth guidance they give over there. And also on the CNG side of the business, the company has already shared their plans to expand and to grow their capacity in the CNG segment. So how is the company doing there, and what are the plans to get more launches and more products in that category is also something that we will be keenly watching out for.
Okay, thanks very much, Srishti. Keep an eye. We'll come back to you on that note also. We'll say a goodbye. Thanks so much. It's a wrap on this edition of Market Cafe. But then Gift Nifty, the kind of move, the kind of gap up it was showing us, that has narrowed a bit. But let's see if we're in for a good start today. Thanks so much for watching.
If you like this video, then like, share and subscribe to ET Now.